Hi, so first I'm Nick Verma. I'm a managing broker at Midwest Realty and Brokerage. And thank you, Sunitaji, thank you, John, thank you, everyone. So the topic we just, she say that of course, like there's a couple things, it's impacting, John and already talked about that, the interest rate is raising, is rising right now. And very few people can afford it. Very hard to afford, 7%, 8%, and that's impacting. And that's impacting to the buyer, but as the other side, the investor making money. So is the good way or is the bad way? Someone making money, but someone is not making. But then we talk about the interest rate is rising, same time the inflation, because the material building cost is going up. So the buyer cannot even afford the new homes because of the building cost is going up. Now we have the material shortage uh, because we cannot afford it, $300 to $400 per square feet brand new homes. So again, there is a problem that's impacting our real estate. Now the rest, when we talk about the housing supply, demand is going low and low, people not selling it because it's a seller market. Seller asking for more money, buyer cannot afford it. Now we have a problem with the inflation. So that's impacting a lot for the demanding because we don't have a supply in the market. And the supply, again, you say then when every realtor will list their home, we're gonna have, the 1 million, but who's gonna pay for it? Who's gonna pay the right price? That is a big problem. Working by home is a big thing now. The reason big investors have a big buildings and they're saying you go stay home and work, but who's gonna pay the rent now? Huge impact. I have a $1 billion building, but I don't have any money to pay my rent now, my mortgage, because everybody's working at the home. So working with the home, that we are, again, if we look into the other side, then we are increasing the demand to buying a bigger home. But the 1% is an investor is losing money. Second, we'll increase the demand to buying a bigger home. So again, it's an impact in the both sides. So I'm thinking in 2025, when I just heard that the Trump, signed that everybody has to go back to the work now, will probably little bit solve the problem. Everybody will go back to work, and then the commercial building start making more money rather than amending and then going to foreclose and the other investor buying. That's a different story. But I'm thinking, yeah, that's impact a lot right now for the a little bit influencing to this market.
To continue on the same thing, I mean, these are not really short-term trends. All the trends that we see right now is kind of really long-term trend that affects market for like 15 years at a time, be that in recession, 15 years at a time, in the inflation area, or in between. So there was a Russian economist named Kondratiev that was in the last century, and he did look at the socio-economic changes in the market that was spread over like 60, 65, 70 years. And each segment was 10, 15 years long. And if you look back in our market, right over here in USA, the last 10 years, 15 years was going up and up and up. So if this is the plateau, if it is the peak of everything, then the local US market and influencing the whole world market, we can go into a big recession for 10 years. So when you are looking for real estate investment, it's not like the stock investment that you can buy today, and if you tomorrow or next week or next month, if you think that you can get rid of that, you can easily do that. With the real estate, your commitments are for the long term. So depending on why you want to invest in real estate, if you want to generate the income and you are on the positive side of the income, then you can go and do that. Or a rental property or something. If you want something to buy for yourself, if you are changing job, if you are moving, then it's the right thing to do. But if you look at all the numbers that's available in the market, people are moving out of the high tax areas like here in Illinois and Chicago. They want to move out to a better weather. They want to move out to a different area where more jobs are available. And that's the way the trends could go for next few years.
Yeah, it's a really, really good point. So one thing to think about in the longer term, because I definitely agree, those are factors that we talk about: the long cold winters, the heavy pension debt, the high taxes, put us at a competitive disadvantage. But longer term, the science suggests that people will move to the middle of the country, the longer domestic migration, because of the extreme weather events. Look at what's been happening in California with the fires, hurricanes and flooding in other states in the southeast part of this country. So 20, 30 years from now, people will move to the center of this country, and this is empirical science, because we're further insulated from extreme weather events, not totally insulated, but further insulated, and there's an abundance supply of fresh water in the Great Lakes region. So that's longer term. In the short term, though, we can see that mortgage interest rates, the double whammy of mortgage interest rates and very tight inventory makes it tough in this market. We saw the rising prices, the supply-demand equation. We also saw that mortgages, the median mortgage payments in the country were rising to $2,300, but rents are also rising. And as you just said, it may make homeownership still make sense for people depending on what their situation is in their life at the time, right? A change in a job, a change in a family unit, multi-generational family purchases are starting to rise in this country, right? It used to, so that's a thing that's starting to happen. I'm a positive thinker typically, but if the mortgage interest rates do come down, that will help. If we can create more inventory through better government and better incentives for builders, that will help as well. But it won't be an overnight thing.
Thank you.
Pradeepji, would you expand on, especially like Illinois being a high tax state, does it affect people, the macroeconomic factor, is it one of the factors for people moving?
Yes, apart from tax, there are so many other things. I mean, if you look into the city of Chicago, last year they have witnessed a decline of about 6.5% in number of home sales. But against that, the prices have gone up by about 8 to 10%. So these factors are, I mean, affecting in a different way. The inflation has impacted the price, but because of so many government policies plus post-COVID, I mean, transition of people from working from home. I mean, so many people have moved into the suburbs also. So these are some different factors. But so far as real estate is concerned, one has very well said that you don't examine the growth of real estate and then invest. You invest in real estate and then wait for the growth. So it has to be a long-term perspective.
Thank you I think we all agree to the answers you have given, and quite insightful. I will go to the next question, but I'll direct this to Nick. I think we'll have to break down a couple of the topics here.
You have to be brief.
Yeah. So I have a question for you, Nick. Have you seen commercial to residential conversion in Chicagoland or the suburbs here? And why do you think it is happening, commercial to residential real estate units?
I've seen in a couple cities, especially Schaumburg happening too much. Schaumburg, Naperville, Oak Grove. The reason, again, I say the people working in a home in big companies, they have empty offices, they have nothing else to do. rather than giving back to the village and what village doing it, they are foreclosing and then looking for investors. And when an investor is doing it, they're converting into the residential condos. This way, the village make money, investor make money, and this is the, but again, it's a huge challenge right now. What you need to go is a step, it's a big steps, I want to be brief, Shiklati say that. You have to go through the zoning department, you have to go through the panel, you have to go through the, annexation, you have to go through the civil engineer, a lot of stuff involved in it. But it's happening too much nowadays, especially Schaumburg, Oak Brook, Naperville, Davie, and I've seen it.
You mean to say, are we solving the rental kind of inventory is very low? So is it helping in one way for the rental? Because I think definitely it's helping when you're converting the commercial unused space to residential luxury real estate we have, or the normal living. Do you think it definitely helps, doesn't it?
It's helping everyone, and helping the investor, helping the developer, helping the people who's gonna afford, because it's not very high cost to buy a condo rather than the single family, and it's helping the city, it's helping the everyone. So it's like all connected each other.
Thank you for that. I will go to my next question, and probably this will be directed to Pradeep ji, because it's something to do with the taxes. I think he's the best person when it comes to questions on taxes. What do you see, what are the different tax incentives, like the class 7A tax incentive for commercial to residential conversions? If we have any, if you can highlight some.
Yeah, the glaring example is the Fulton Market area in the city of Chicago. That 7A incentives on conversion, I mean, though it's a time consuming process, but they make the, they give almost 20% on the construction cost, plus there are some long-term incentives. So, but there is one condition on that, that certain number of spaces should be reserved for low and medium housing community, and the rest of the things can be done. So there, all very elaborate regulations on that. But having said so, and Nick rightly said, the trend we find mainly in Schaumburg, Oak Brook, and the city of Chicago also.
Thank you so much. I will direct my next question to John. What do you think will be the future trends in real estate? I don't think I can answer that. I can answer the question.
That's okay. I can try to answer that one if you want.
What do you think is the future trends in real estate, and also how is technology being used in real estate, both for like buying, advertising? Do you see any changes because you have been in the industry so long? What are the future trends, do you think, after post-COVID, especially? Because with COVID season we have seen, now we are into post-COVID. We cut, gas is on, our pedal is on the gas. We have a fantastic run for 4 years. What do you think the next, you look at the chapter?
Yeah, we saw since COVID, we benefited in the short term here in the suburbs. People were moving out of downtown Chicago into the suburbs. Because Illinois was an essential state, the governor, in our relationship with whether it's a Republican or a Democratic governor, the Realtor organization maintains those relationships that are really important. And the governor of Illinois we lobbied him, and he did say that real estate was an essential business, an essential service. Didn't happen in every state when COVID hit. Just ask the realtors in Pennsylvania. They were dead in the water for pretty much the duration of that global pandemic, but we were able to benefit in the short term. People were moving out of downtown Chicago out here in the western suburbs, but they were getting different types of housing stock, right? They wanted to downsize, in some cases upsize and get the home office, but in other cases, depending on where they were in their life cycle, and I think some people wanted to downsize. I know my wife and I did that. We live in a condo now. We love it. I don't have to shovel snow or do any of that. So I like that. But the nature of housing, you know, the traditional white picket fence thing, Americana, that is kind of gone, right? And it just depends on, people are wanting different things. Based on lifestyle and based on other priorities. And I think that's a good thing for us. And also the trend toward the ADUs and smaller homes that are on a lot where you have another member of the family live there, container homes. Although during COVID, the price of containers went up, you know, so that made that less affordable. I think the nature of home ownership is changing, but there's still a very strong pull for it.
Yeah. So do you think there is a rise in multi-generational homes after COVID?
We have seen a 17% jump in multi-generational home purchases in this country. We don't have the data for Chicagoland quite yet. So yes, it's a thing.
Yeah, it's a thing where the college kids are coming back to the basements. Mom and dad are coming to stay with us. You know, things like that have changed after COVID. The whole perspective of looking at life is different.
Yes, and you mentioned technology as well. It's the younger generations in some cases coming home. Okay, you can move into the basement, you can live here, but you got to figure out how to do all our smart home technology. You know, you got to figure out how we automate our lighting systems and our security systems. And I'm using a blanket generalization about a whole. Yeah. But that's the thing. I think AI certainly is going to come into play increasingly in real estate in lots of different ways, in helping to auto-populate listing language, many different ways, helping to automate smart homes as well. So that's a whole new thing.
Thank you so much. My next question I will direct to Pradeep ji. Can you highlight like any of the global city for investment trends? If you are comparing it to Chicago, and I have seen other cities globally where they are taking what do you call the blockchain money, or what, you know, they pay it in different other than cash. So
Yeah.
different methods of payment for your real estate.
Right. So globally, as even I talked earlier, American real estate is still attractive in spite of so many things which we are facing because of the strong US dollar. Its affordability is less because it becomes costlier for the foreign buyers, but at the same time, it's a very good investment for them. If you go outside USA, one of the fastest developing markets is Dubai. I mean, they are coming out with so many new projects and new construction things. But at the same time, India is also a very lucrative investment hub. Indian real estate is increasing constantly for past few years, and probably it has reached the top. So probably we might go for stagnation level, though there will not be any decline because of the continuous, pressure on the land in India. If you go to China side, there is a stagnation for almost 5 years. There are so many multiple projects which are either lying half finished or vacant properties, and they are still trying to come out with that. And so far as Europe is concerned, because of the inflation, the prices have become unaffordable technically. But in Europe now the things are slightly in doldrum because of German economy is weakening. Last 2 years they have witnessed negative growth. So unless we hope that it does not, but if it slides into recession, technical recession, then we'll have a problem all throughout Europe, and that will even revert back to US also.
Yeah, thank you. I think to end the panel discussion, my last question is to Vimalji, who has been a banking expert for all his life and now is a real estate agent. So what do you see a difference in South Asia and US in all those years of banking experience you have? What has changed in terms of real estate and the banking industry as such, in terms of lending money, loaning money, because here I have seen people saying we paid 18% at one time in 1980s, right? India, where does it stand compared to, because we are one of the South Asian countries? Any highlight on the banking industry will be beneficial for us.
so far the India is concerned, the money coming into the country earns little higher interest rate than rest of the world. The parity on foreign exchange rate and everything, that need to be considered if you are going for 5-year, 10-year, 15-year investment in that. But then it's not local banking anymore. It used to be local, countrywide, but now it's a global banking area as well. People who invest in different currencies, at the same time, they hedge their positions in the market so that if currency goes down, they are protected. If currency goes up, they of course get interest plus the appreciation. That way, other than India, other countries as well is looking at the same model. Country like India and China, they have their own population that is part of the demand for everything. And world looks at that. Like here in the USA, all our technology and everything, if we want to spread it over the world, we look at two factors. Can we sell it to India? Can we sell it to China? That we have a prime market. And that's how the world goes.
Thank you for that insight. I think we had a great panel discussion. Pradeep ji, you want to add something, and we'll open the floor for at least 5 questions from the audience.
Yeah, I'll just add one thing, that in spite of whatever is going on, unless and until there is something radically wrong, we have real estate and technology moguls now in DC. We are expecting Star Spangled Banner to wave again on the Martian soil, and so with that, future for real estate investment in US is bright. Thank you.
I think I'll open the Q&A. I think all the panelists did a wonderful job. Time is of essence, and we are running short of time, and we have to give enough time for our main sponsor. So anyone has any questions, or you would like to add? Yeah, there you go. Yeah.
Hi, my name is Tanvi. So I know you mentioned about AI and real estate. If any of you are aware of any portal or anything being already built combining real estate with AI, so like how you said that it will auto-populate the listings, or like AI can help do the comparison analysis, because a lot of these things are kind of in a way threat to us, because if somebody something is replacing my job, I just want to know. But is there already any kind of portal being worked upon? Because California people, they're always doing startups, and real estate is hot and AI is hot. So if you're aware of any portal like that or something already being built, or if you see a future like that, I just want to know.
I talked to a friend of mine this morning. He texted me and said, "Hey, can you talk?" And we did a Zoom call. And he's at the Inman conference in New York City right now. And he told me about a startup that's working on automating when you input a listing, because it's the bane of brokers having to do manual input, that it has that predictive typing, and it can guess and do a lot of the work for you and auto-populate. So that's a thing. We have to be careful though with AI, especially when we're working on listings for housing reasons. That AI doesn't, it's not evolved enough to know to write a description that is fair housing friendly. So we need to be careful with that, with the technology that way. In terms of AI for other things, a lot of us are thinking about that. I've had somebody pitch to me about an AI front end for our voice system at Main Street, because our staff, we have about 34 full-time staffers for 19,000 members, and we field sometimes in excess of 10,000 live calls a month, our staff does. And they're trying to pitch this AI technology as a front end where AI voice can field phone calls, answer questions, and I'm intrigued by it, but I'm a little bit scared, not because it's gonna take over and launch intercontinental ballistic missiles and, like Terminator or the Matrix, but I'm afraid that our culture of member service, customer service, which we are known for at Main Street, I don't wanna do anything to damage that, but business leaders have to think about AI.
RPR is also using the AI thing they were talking about.
See, RPR is using AI for predictive analysis. Plus, there are other independent individual models. Sold by different private groups. That are available. We can get to the list of those for real estate predictive analysis. Another even Embred is right now working with some AI companies so that all whatever input we are making, it will streamline all these inputs throughout the nation, not even in Illinois alone. And another is blockchain transactions. So they are using AI, in a big way. It's just on the development stage right now. But so those blockchain transactions will also be facilitating, and there will be the probably future for all real estate transactions.
Go ahead, yeah.
Yes, I have two questions. First is, suppose in one building, someone has 100 condos, and out of that, one person owns 80. And is there any way, if someone wants to buy, if someone wants to sell one unit, and he is a single owner, and if he wants to sell, conventional people don't get the loan, because there is a law that if somebody owns more than 20%, conventional people cannot buy. Cash buyers, they are not able to buy because the person who holds 80 units, they make the rules and they keep the low reserves. So that person is at the mercy of everybody, means the person who holds 80 units. So is there any law in Illinois?
I don't recollect of any law, but normally majority prevails. So whenever the condo is controlled by a majority of the members, it's basically when you buy a condo, you would always examine the constitution and the documents, bylaws and other things. So if bylaws do not provide for such type of thing, nobody can help you. Even you have the best attorneys with you, they'll not be able to help. But the bylaws are congenial to that. The majority cannot change the bylaws afterwards, to the detriment of the minority.
So that person is at the mercy of that person, another person.
He has to see the bylaws originally when he bought it and what was there. And if somebody has modified the bylaws afterwards, which is detrimental to the interest of the minority, they can always protest on that.
Okay.
Not otherwise.
Second question is, suppose somebody has 20 buildings, and out of the 400 units, if he wants to convert that one commercial to a residential, that classification would be a condo or that would be a co-op?
That depends on what type of classification you want. Government is open. So as conversion is concerned, if you go for 7A scheme, they will definitely ask for the condo conversion, not co-op.
But in a co-op, there the real estate taxes would be 50% low.
That depends, yeah. Because we have particularly in
And we are
Illinois, the
talking in
concept
millions.
of but in Illinois, the concept of co-op is not very much, prevalent. Basically, if you find in Florida and those other states, there is, they mainly go with the co-op and so that type of thing. So here it is difficult. In Illinois, I don't know what are the problems, but the law is not very much congenial to co-op. So.
Okay, thank you, sir.
I don't know, I just want to mention one thing you'd say, because I just had that experience. So everything what you presented to the panel, you have to make the business plan, take it to the village, talk to the panel, and if they approve, they approve. But you have to have a vision, you have to have everything on the plan, on the paper, and just go to the panel. May happen, may not happen, everything depends on them, how you present them.
Go ahead.
Good evening, gentlemen. My name is Melvin Walker. I'm with Prime Lending. And I just kind of wanted to add just something that John had talked about when we talked about when we look at the United States sitting on how much equity we have. So back, right, when we were in COVID, as we were going through the shutdown, the United States and all the homes were sitting on about $62 trillion worth of equity, which you were talking about. So the number today is 35 trillion. So that speaks to the inflation that we're talking about here. So what ended up happening is a lot of homeowners were doing what? Dipping into their equity, right? To do whatever they needed to do to stay funded, keep their mortgages on time and what have you. So it's interesting to hear how inflation is doing what it's doing, because now we're looking at $35 trillion worth of equity, right? But still, that's a good number, right, to look at. And so in terms of what it's gonna do for rates now, you also talked about the unemployment. The unemployment side of it is, I follow it closely with my employer at Prime. We're looking at about 4.4% is what they're projecting in terms of unemployment. So that could cause rates to come down a little. We're all hoping that, right? The numbers that I'm hearing is somewhere around 4.75 to 5. According to the loan economics, mortgages perform better right around there. When you look at the stats of homeowners, they're usually people who have credit scores of 720 and higher. They have about 40% or so equity in their home. Mortgages are on time, employment is stable. So, right, so those are good things, right? So we're hoping in 2025 that we see that trend continue, right? Because that means good for all of us in the room here, lenders and realtors. So I just kind of wanted to add to what you were saying, John.
Well, thank you. Yeah, thanks.
We can hear.
Thank you for that information. That's really helpful. Yeah, glad to hear that. I would love to see average mortgage interest rates below 5 again. I would be doing cartwheels down the hall.
Well, and as you know, the rates are not gonna get there, like, it's not gonna be this quick drop. Anybody that follows the market knows that the market trends like this, right? We call it the proverbial bottom, and when it hits that proverbial bottom, then it shoots right back up again, right? So the thing is, we just all have to keep a watchful eye on it, and I think we'll get there. My crystal ball is broken, I can't tell you when. It's still in the shop, but I feel pretty optimistic about what we're gonna see in 2025.
That's really good. That's really good news. I'm a positive thinker, and that helps give me additional juice there.
Yeah.
But what you said about people having 40% equity, having that, 4.75% interest rate, having those factors real stable, people can sleep at night with that.
Yeah, I think we're gonna get back to it. I think that the tough part is behind us, and I think we'll do good moving forward. Thank you for allowing me to share.